Today we're going to talk about the price action that we've been seeing in Bitcoin over the past 48 hours or so. And you can see it's been fairly negative. And I think the market's been trading mostly off of technicals rather than any fundamental information. Although there are some news stories that I do want to talk about. But one very convincing factor here for why price might have moved to the downside is we were trading in this sort of consolidation phase here. And we tested this very substantial resistance level at 11,500. And you can see here that we built that resistance up throughout January. We built up that resistance throughout February. And we can see that we tested that level again right here. And it looks like we weren't able to break through it, which I suppose really shouldn't come as too much of a surprise given the amount of volume that we had across the board. Although the volume situation was lowest at Coinbase, this was actually very low compared to some of the other exchanges. If you look at Bitfinex, for example, here, you can see how the volume situation, while it was still low, was nowhere near as low as it was with Coinbase. So not really sure what was going on there. I believe the same is true of Bitstamp as well. If I go ahead and go over here, yeah, you can also see the volume was fairly tepid on this exchange here, but it was nowhere near as low as the situation as we saw with Coinbase. So when we look at this, I do believe a lot of this is trading based off of technicals, and I would be cautious if we come back up to that $11,500 area. Might not be the worst point to take profits, especially when you consider that we're also going to have resistance at this 100-day moving average. And then if we break out to the upside above the 100-day moving average, then things probably shift over to being a little bit more bullish. So some of the news events that are coming around surrounding this particular event, we have seen some evidence that perhaps this crash in Bitcoin throughout the beginning of the year might have been the result of one of the trustees associated with the Mt.Gox bankruptcy started selling some Bitcoin and Bitcoin Cash. You can see here that 36,000 Bitcoin was offloaded, as well as 34,000 Bitcoin Cash. Most notably, 18,000 of those Bitcoin, or roughly half of the entire lot, was moved on February 5th, which also happens to be the day that Bitcoin reached practically its lowest level. Actually hit its lowest level on February 6th, but if he sold it the next day or whatever else, then that could have been the cause for this movement to the downside. I actually wouldn't be surprised if this was the case. One of the biggest criticisms of the cryptocurrency market is its low overall liquidity, and we've seen time and time again that the market depth in these order books is just not large enough to take some of these orders, and it can result in prices fluctuating very substantially. Now that's true for Bitcoin, but it's even more true when we start getting into some of these altcoins. For example, if you look at an exchange like KuCoin, you're going to find situations where there are certain altcoins that you could manipulate the market cap of by millions with just $1,000. So this is a situation that's a problem across the board in the cryptocurrency market. It's even true of the largest cryptocurrency, Bitcoin. Liquidity has been a criticism that has been levered against the cryptocurrency market for quite some time. People are arguing it as the potential cause of the bubble. If you have ever listened to the concerns related to Tether pumping the market, some people don't understand that because there's only $2.2 billion worth of Tether, that isn't enough to move a $166 billion asset. Well, there's not actually $166 billion invested in Bitcoin. The amount is much lower than that. People have talked about this all the time. But the problem here is that the float, which is a metric that I'm bringing over from the stock market, the float, the amount of these coins that are actually being traded on these exchanges that is available for the market and available liquidity-wise, is relatively low across the board. And what this ends up resulting in is we see a situation where you can easily manipulate the prices of all of these different cryptocurrencies because of the way of how fragmented the exchanges are. There are some solutions out there that are trying to connect the different exchanges to provide more liquidity. I don't know if that's going to work out, but it is one of the biggest criticisms of the market, and I would not be surprised if this particular sale of Bitcoin might have been the cause for this massive, substantial move that we saw to the downside back in February. So that's something that's worth noting. We also had this situation here with Binance where there was some compromises associated with third-party usage of their API keys, where some people found that their altcoins were being sold for Bitcoin, and then that Bitcoin was being used to pump a specific coin. And as a result of that, Binance had to investigate into the issue. They had to stop any withdrawals during the investigation to prevent any of the compromised funds from moving from their exchange. And it sounds like to me they are going to handle the situation and reverse any fraudulent transactions and restore the funds to their original owners. So that's excellent on their behalf. Personally, I don't use Binance, and here you can also see the CEO talking about it, but I personally don't use Binance. I prefer to use Bittrex. I have some trust issues when it comes to the Asia Pacific region of the world, when it comes to exchanges or businesses. There's more regulatory risk there, and usually the transparency is a little bit lower, potentially due to the language barrier and a number of other factors. So personally, I try not to use Binance unless they have a coin that's only available on their exchange and not on Bittrex. But for those of you that do use Binance, and I know that's a lot of you, it sounds like they're dealing with the situation very gracefully. So props to them. We also had this situation with Coinbase where they are launching an index fund for US accredited investors. It is going to be investing only in the assets that they have on their platform. So that's Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. You can see the allocations here. It is market weighted, meaning that if, for example, Bitcoin were to go up substantially and Ethereum and Bitcoin Cash and Litecoin were to stay where they were, then the current allocation of Bitcoin would go up. Simple as that. When it comes to this, I wouldn't touch it. Personally, I wouldn't touch it. The 2% annual management fee is far too high, at least in my opinion. I get why they're doing it. The custodianship of cryptocurrencies is much riskier than the custodianship of securities. Still, I personally wouldn't mess with this. I think that it's better to just hold your own cryptocurrencies. I don't know if they're going to offer any protections in the event that their security becomes compromised and they lose some of those funds. I don't know what happens in that situation. So personally, I wouldn't invest in this. And another reason why I wouldn't invest in it is because you're forced to have a 7% allocation into Bitcoin Cash. And personally, I think in the long term, Bitcoin Cash is going to go to zero. I've talked about it in the past. They just don't have the Bitcoin brand. And as a result of that, I think most forks, unfortunately, that keep the original name usually are going to end up in a situation where in the long term, 5-10 years, they're going to be so insignificant and probably be worth close to nothing. So I don't agree with investing in this particular fund, but it's available for people that are interested in it and want to have an easier way to access the market. And lastly here, I wanted to talk about this SEC statement when it comes to online trading platforms or exchanges, and the problem that they aren't really exchanges. They're not regulated as national securities exchanges as dictated by the 1934 Exchange Act. And they've mentioned before that, because this is not regulated the same way a national securities exchange is, there are some very big concerns when it comes to what are they listing onto the platform, how transparent they are, how the executions are done under the hood, so on and so forth. So they're basically just warning investors here. It doesn't sound like they're going to take any action yet, but this type of press release or this type of announcement from the SEC is obviously a concern for exchanges like Bittrex, which in my opinion does have securities listed on its exchange. I don't know what they're going to do in the event that the SEC starts trying to enforce this type of ruling. I genuinely am not sure what's going to happen in that situation. It is one to keep an eye on, but I do not think they're going to make any moves soon. Based off of what I read here, it just sounds like they're warning some investors. So just wanted to briefly bring that up. But those are my thoughts in general when it comes to the cryptocurrency market. You can see that across the board we've had some fairly substantial declines. Poor old Cardano here. I bought into it at, I believe, 2,610 Satoshi, and we're currently trading at 2,535, which is actually better than I expected. This is a situation, again, I've mentioned I kind of like Cardano where it's trading now. It's trading right next to its support levels. unless we start seeing the market substantially move to the downside, I still think there's some opportunity there. And Monero just doesn't know how to go down. I actually tweeted this out. I really want to buy Monero on any dips. It's my biggest altcoin holding in my portfolio, and there's just no opportunities to get into it, but it is still one that I'm watching fairly closely. But anyway, those are my overall thoughts when it comes to the market. Let me know what your thoughts are. As usual, I hope you guys enjoyed the video. Make sure that you check out my Steemit if you're interested in interacting with me. I tend to be a little bit more active on there. Otherwise, as usual, leave a like, comment, and subscription, and I will get back to you as soon as possible. Thank you for watching.